Where do we go from here? Hi, everyone. I'm Maggie Lake, and today I'm talking markets with Tony Greer, editor of the Navigator newsletter and co-host of the Macro Dirt podcast. Tony, I should have known this was going to happen because you were on What a Day. In the morning, investors were concerned about a spike in treasury yields. It was raising concerns the system was breaking. We were hearing all kinds of really, really gloomy talk. And then in the afternoon, Trump announced a 90-day tariff pause on countries who have not retaliated. Equity markets rocketed higher. I mean, this is like historic moves we're looking at as we're settling here. And we got to settle to see this. NASDAQ up 12% on the day. S&P 500, 9.5. Dow over 7. This is, I mean, we don't see moves like this. Talk to me about what you're seeing on the tape.
All right. So the setup for today's astonishing rally came with, wait for it, quite honestly, the timing of yesterday's gap higher opening, right? That's literally what happened. So with the timing of yesterday's gap higher opening reeled in a lot of bulls, and the bears, as you saw, took over from bell to bell and said, oh, up 2.5%, 3% on the opening. We have selling to digest. Here it comes, right? So we knocked the market all the way back to the lows. And on the lows, we hit, in my opinion, the peak hysteria point. And I was quite honestly part of the hysteria. I'm not saying I was outside of it. I'm saying, do you see the fucking bond market? Like this is crazy. Like, because I honestly, you had to be lockstep with this to be able to feel what was going on. Mm-hmm. So we had that big, huge sell-off yesterday that ended on the lows. We came in this morning and there was the worst bond fear that I've ever heard, right? People talking about reserve status and 5% in the 10-year. And you're like, okay, there's max.
And the Fed's going to have to intervene. Things are blowing up. I mean,
how many eases, how many times are they going to cut this year? They're going to be an emergency rate cut. How much of it, you know? And it's like, there was so much hysteria, and I'm going through this stuff on Twitter, and I'm like afraid to turn on the Bloomberg to see where the stock market is, you know, because I'm now the bond market is coming apart. I'm scared shit myself. Now I'm like, this is bad. This is not really bad.
Now, I
turn on my Bloomberg like this, and I look through the thing, and I'm like, wait, we didn't make a new low in stocks, and literally started buying things in the pre-market, because if they didn't make a new low with the bond market cascading to a new low, you know, really, really testing 4.5% in the 10-year, there was like absolute pandemonium and mayhem. We still are in an absolute sentiment bubble of a black hole sentiment. And it got exacerbated because we closed on the lows yesterday. Now, what is that? That is typical high vol day-to-day trading, right? But what it does is it empowers the bears. The bears get religion on a day like yesterday. They're like, oh, here we come. Down, we're going to go through new lows. And that's why it's so hard to be a bear market trader, because the market got an incrementally worse set of news this morning with a new low in bonds. We didn't make a new low in stocks, and you had to be curious from there. And if you remember how, you know, if you have the scars from the dot-com bubble, from the great financial crisis, you know that big down days are often followed by big up days, which, by the way, this is going to be followed by another plunge at some point. I really believe that. And you know me, I'm a natural born bull. I had a humongous trading day today, but I got my money back. They got me good on the way down, right? So the way that I think is going on is today, Trump corrected the policy error. You know, there was interesting stories out about how Scott Bessent was the smartest guy in the room. This is another story that I fully believed in, by the way. The conspiracy that they're shuffling the deck with global trade here and tariffs and spiking volatility in stocks so that they can get rates lower and refinance the $9 billion that we have to refinance our treasuries this year. That looked plausible until the S&P collapsed. Markets hit bear market territory, and Scott Bessent was being named this morning as Baghdad Bob. So that's how quickly you lose credibility in the markets, right? So they're calling it his Liz Truss moment, right? The woman who came into the worked it for the UK, destroyed the gilt market in 2 breaths, and they were like, okay, that's enough of you, right? So we had a similar situation to that, and then so Trump came out with a statement today and cooled everything off, and now having the bears empowered from yesterday, they're scale up selling at first, right? Until all of a sudden, now we're scale up limit short. Oh my God, there's a headline out now and we're wrong. Mm-hmm. There's literally no price that you can There's no price that you cannot pay to get out. There's no price, right? Because getting caught short the S&P in a hole at 50 vol is as bad as getting caught long, right? It's the same exact trade upside down. So now everybody's got to get in. Now the long only guys who have been getting pounded on the bid for the whole week, they're like, okay, pay offers now. We're supposed to buy more stock today. And next thing you know, right, everything turns on a dime. So we've got massive, we know it's another one of those days, Maggie, that I have to sit down. I have to first walk my dog and then come back and just kind of reshuffle my brain, unwind a little bit, and then assess what happened, right? Because it looks like to me, we've got another day where it looks like we've got at least a dozen to 15 sectors with 3 sigma moves higher. Now, well, you got to decide, and now this is going to be a bitch for me, quite honestly, because this is the kind of day where I might be saying, like, literally sitting here writing a note tonight till I'm done and saying, okay, when you wake up tomorrow, buy stocks. It's go time again. Remember November 2023? We're there. Because this day is going to look just like that. But what this day is doing is counterbalancing all the damage that we saw on the way down. Because this is exactly what the screen looked like upside down for 2 weeks. Right. Yeah. So we got to see which winners are shaking out here. Like who's really jumping out of the hole in this rally and catching up, who is still in a terrible, like there are some charts that can rally another 5% before I'd even consider shorting them.
Yeah.
And that's what I think was going to happen in the S&P. Now, let me tell you this. A retracement to tomorrow's lows is not out of the question. And if you think it is, you're playing the wrong game. That's really what I think. Like, quite honestly, and I'm bullish. I had a great day today. I went home flat as a pancake. Flat as a pancake. I'm a natural born bull with one of the biggest up moves in history. And it's because look where we stopped here. The cream puff tariff sell-off in the S&P was from 6,200 to 5,600. The big boy sell-off was from 5,800 to 5K or 4,800, right? So where do we make it down to? Where do we stall out so far on the highs today? Right at 5,600, that level that was the first low. So now that's going to be resistance. And if I wake up tomorrow morning with fresh money and we gap higher and go negative, the bears are going to get their lobster bibs out again, and everybody is going to hit every bid in town, and God knows where it's going to go. Now, you like to think that with this news on the tape that we're not going to go make another low, but this thing can swing another. If I tell you, Maggie, it can go down 500 points and still be a buy. So my point is just expect that, right? Like expect that. And don't get, this is now most important now. Every move is just for that day.
Mm-hmm.
That's it. Every move is just max reaction. Everything is so emotional. It's so headline driven. It's so final, right? It's like, we got to get this position on now because we got to get another headlines coming tomorrow. Like this shit's got to get done, right? So that's how everybody's acting in the markets. You settle you settle at the end of the day, the bell rings. More people are flat today than you would imagine. You know what I mean? Like just kind of figuratively speaking. Right. So this business has all been done. That's why you come in tomorrow and people say, okay, that news has not much of a follow through there. What do we do earlier in the weekend? We bought stuff cheaper. Do you still got selling on the pad? Yeah. Okay. Let's go sell some of this stuff out today. We got a nice five, and next thing you know, the bottom falls out because who's standing there buying it?
Mm-hmm.
Right now we're heading into another weekend. We got weekend risk. Right now, how do you want to play that? Do you want to play that where something negative is going to come out, or you want to play that where you get to be long stocks and then everybody comes in Monday, long time decay, and then the VIX just melts because there's no bad news on the tape? Man, this is becoming a very, very tricky game now.
Yeah.
Right? So
that's I think so much good in there. And I really, that like underscore exclamation point, this is a day-to-day game right now. If you are not a day-to-day trader, and not many people are, then be really careful here. Like this is not a game for amateurs right now, I think.
Yeah. And this is, put it this way, this is something that I think closes the door on the lows of the move. Like we're not going to trade back. That's a good low now, as we used to say on the floor. That's a good low. We're going to work off of that low. If we go down there and trade within one handle of it, I won't be shocked. I will not be shocked. I'll be buying it like you've never heard of before, because I don't think that I think the Overton window in tariffs has been thrown wide open at China's 84% tariff. You know what I mean? Like, okay, at what price do things become not a buy for the consumer? Right? At a certain price, my hands go right back in my pocket and say, okay, you want to charge me all that? I'll go buy something else. You know what I mean? I'll go shop for something that's cheap right now.
Yeah.
So a lot of that stuff has got to play out. And I got a feeling I want to give Bessent credibility that I had coming into this mess. And he will get it back. But for me as a natural born bull, I'm salivating to sell a rally to 5,800. I'm salivating to buy a dip towards 5K. And I realize I maybe do a lot of thumb twiddling in between right now.
Yeah.
You know, because if you're not participating on pressure points, like I can look at so many charts today and just talk myself right out of trading them. It's like, oh my God, 50 vol, we're kind of mid-range here. Could go either way. Like I'm not touching that thing. You know, luckily we had like the sense, and we talked about it this morning in my note and in the Slack channel, like the bond shit is scary right now. If that doesn't tip us over in the first couple of hours, it's going to rally. Now, nobody had this magnitude involved in their head, but this is what we should have been expecting when we're rallying out of a sentiment black hole, because that's why the dynamic flywheel gets going. So I don't want to just take up all the air.
No, I think that's great. And hey, everybody in the chat, everyone's sort of has the same kind of feeling we all do just watching this. We'll get to as mmany questions as we can. There's just also a lot of comments of people who are kind of watching this wild ride at the same time. So I want to start. We have a couple questions about, you know, where to get in, what to do. So they may not have an answer. Let's just have a caveat. There's so much unknown, and I want to ask you some about that, but let's get some of those sort of more technical questions in if we can. Doug asking, what level would you pull a short on the FANGs?
You know, I'm still, put it this way, above the market now. There's two levels really. There's like I said, there's the cupcake tariff sell-off low at 5,600, which should be really, really good resistance now. If you remember, we sold off from 6,200 to 5,600, and we bounced all the way back to about 5,850, right? That was a really strong rally. It lasted several days. It stayed within trend. And from there, we absolutely shit the bed. So when we fell through that 5,600 level, the next time we made it to the low. So 5,600 is low-hanging fruit to me, especially if it's in a reversal situation where we come in above yesterday's high tomorrow morning. You'll see people thinking that this whole sell-off is over, and there will be hedge funds standing there waiting, right? So that's something to look out for. And then you have where the 50 and 200-day moving averages intersect up at 5,850, and those would be my only two spots to try short. Because like I said, it's going to be a day-to-day thing, and God forbid those two shorts don't work out and are wrong. And next thing you know, the S&P is above 6K again, above all the major moving averages. With this in the rearview mirror, I mean, look the fuck out at what could happen from there. That could be the beginning of a 3 or 4 year Trump rally. But I think that quite honestly, because the atom bomb of selling was so intense, I have a lower probability, Maggie, that we go sailing off to a new high than I do for us to, you know, have a hysterical short covering rally and then disappoint everybody and sell off and get everybody all in the dumps again. Another 500 points, you know, maybe we hold those lows again because people say, okay, it's not that bad, whatever. But anything is fair game for me right now.
Yeah. And listen, I think that's really sage and fair, Tony. You yourself said we see this kind of action in bear markets. There's nothing stopping that. You're talking about, rightly so, some of the dynamics of trading, which dominated today in that swing in sentiment. We have so many questions about tariffs. We are in what some people are saying has gone beyond a trade war. And is it a trade embargo right now with China, who is one of our largest trading partners, right? The repercussions of that are unknown. There are so many, there's still a lot of uncertainty. 90 days may be spread out, you know, so I think the question we're all asking each other is, have things changed, or was this a, you know, face ripping rally in a sea of uncertainty? And maybe there are two sides to the trade now after 3 or 4 days of looking like it was just, you know, something was going to break. That's different now, but you're right to be super cautious about this. And we're going to continue to ask a lot of people their thoughts on that sort of Main Street side of things. We're going to start going into earnings, right, where we hear from people. All right, let's get back to the questions. This is a great one. Kenneth, why would the VIX go down on a 10% up day? I thought it was supposed to measure volatility.
Well, we got to look, we have to know where the VIX came from and where it's trading, right? I mean, you had to be thinking that what was it? I guess this week's high of above 60 was, that felt like it was the capitulation. Was it into Tuesday? Was it? I don't want to get my days right, but yeah, when the VIX traded up above 60 like that, you had to think that was the day that we saw the peak, right? That rivaled the yen carry unwind high from August in the VIX, right? So when you got that sort of flat top and say, okay, that's what real hysteria looks like. It's not this bullshit. That's why I said the first part of this tariff sell-off was a cupcake. It was just this orderly 30, 25, 30 vol backing off, small ranges. And then we blew the lid off it. But when you come in and a couple of different things, when you make a new low in stocks, but the VIX doesn't make a new low, that's kind of a tell. Like, okay, we've framed max hysteria as far as the VIX goes. That's what we know. It's kind of like as bad as it is right now around here, right? Then it comes in on a day like today, and once that call came out, I mean, we just had record amount of put option buying, right? Just a pure record amount of volume in put buying. So at some point, that buying of volatility stops, and it stops on a day that the market's up 10%. That's why the VIX collapses.
Yeah.
They got to get filled in somehow.
Yeah, that makes sense. This is another question that I think is interesting. Gerard, does Tony think the smart money or dumb money is buying into stocks now and for near future?
What I see it as, like Maggie said, there's two sides to the trade now, and anything can happen. It could end quickly, meaning we could get right on a bull market horse. But like I said, I think that's a low probability. So what I do think is that it's a back and forth here. Who's going to be buying stocks are the long only plain vanilla guys with 20 and 30 year time horizons. Those have been the only guys buying stocks this whole time. That's it. You know what I mean? They're like the capital researchers of the world buying for America's funds and your Fidelities and your Vanguards and things like that. And they have stock to buy down 5%, down every 5%. They have stock to buy because that's how you get long for 30-year time horizons, right? So there is two sides to this trade, and it's going to be hedge funds playing a lot of hot potato now in between the long onlys who want to buy cheaper, and they'll be patient a little bit, but they're going to be around at these, discount prices from the highs. And then this is going to be, like I said, guys picking off and buying in front of them and trying to flip it back out. There's no real, at this point, it's hard to think that retail, who's been such a big participant soaking up the selling, is going to turn and puke any of this stuff. You know what I mean? Like retail usually operates, I know they're wrong a lot, but they operate on like a longer time horizon. Like we didn't hear about them being a big buy force in the market until we got down to S&P 5,400, 5,200. Then Goldman's coming out in their report saying that was huge retail buying to match hedge fund selling yesterday. So that's hedge funds that are still stopping themselves out of stock that they held on to for too long. And now retail's soaking up, a lot of the difference with the long only buyers. So there's going to be two sides to every trade. My gut says not to get reeled in on a recovery rally. That's what I'm going to try to not let happen as a natural born, but only because I have to control my own tendency
right
to get limit long and stand up on the chest and go like this when we close on the highs. You know what I mean? Like I know how to do that, but I don't know it's going to work this time. So I'm not going to, so I would be much careful.
Discipline. That's why you have a framework. That's discipline. Let me ask you a question. So I think it's important. And the other thing that happened too, because the tariff grabbed all the headlines, but we had a decent 10-year auction too in bonds, which was interesting, like amid all the fear of the treasury market blowing up in a liquidity event in the morning.
Yeah. I mean, I'm not a good enough bond trader to be able to explain all of that. You know what I mean? I'm not sure any, I haven't seen a good explanation, by the way, but so let me ask you, when you're thinking about what you're nervous about and like the things that are on your radar, helping sort of prevent you from getting too bullish too early. We were talking about a liquidity. The market was talking about concerns about a liquidity event. We saw, spreads blowing out, SOFR blowing out, VIX up, some really worrying signs for those who are around that like had echoes of 2008 again, of the markets just starting to not function in the morning.
okay, so then we get this, surprise, and we have this massive rally. Surely people were not, you had your best trading day. I know a couple of other folks we talk to all the time based on their Twitter comments look like they also nailed it, who kind of thrive in these environments. But are we still at risk that there's a hedge fund on the wrong side of this, that there's a fund? So if we went from almost blowing up from the unexpected in the morning or strains in the system to a face-ripping rally that somebody may not have been on the right side of, are we still at risk for some sort of market event here?
Well, first of all, I think we definitely are at risk. Like I'm not gonna sit back in my chair and breathe easy at any point with the VIX above 30 as of right now, right? Like anything is on the table, Maggie. You know me, and I mean, I've traded through, like, this is my third crash that I've traded through, a mini crash, whatever you want to call it. But the bond market is still a risk to me. Like it came, it sold off to a new low, came all the way back strong today, almost back into range, not out of the woods yet. Definitely something that I'm not taking off the top of my radar. Definitely something where I wouldn't say, hey, bonds are getting sold off to the lows again, and stocks are trying this resistance level. Like I'll take a shot at stocks, because if bonds break down further, I'll just get out of my stocks if they rally through this resistance level. But if bonds go down a lot further, the market's going to get spooked. Like, one of someone that, Larry McDonald, who had a great tweet out yesterday, which is exactly what I was thinking in the morning. Yesterday in the morning, my note to my clients was a picture of Jaws underneath the bond chart. And it was before the bond chart broke down, right? It was like, okay, if this happens today, it's going to drag on the equity market. So don't get excited about this higher opening. And then this morning, the comment was, well, bonds sold off. They're still selling off. We haven't made a low and newer low in equities. So take for that what you will. And everybody's as bearish today on the low as they were bullish on the high yesterday. You can't tell me different. So there's that dynamic. But to me, yeah, like this is how it happens, Maggie. Like, this bond chart has the big hysteria volatility, but then all of a sudden it starts curling off slower at a slower pace. And while the equity market is trading a resistance level, and then everybody starts hitting each other and says, you see fucking rates going higher here? Yeah, sell stocks. And next thing you know what I mean? That trip into the resistance is just a huge failure. And then you get to the thing where lower prices uncover selling again until you get to that plain vanilla bid. And there's a lot to think about. But if you now, it's very, very important to pay attention to what's moving how much versus what. You know what I mean? To me, there's we got a major bond breakdown on the charts. We have a major crude oil breakdown on the charts, which may have just recovered the whole thing today. I got to take a look still. We have a major gold break to new high, or a break right back towards the highs again after holding the moving averages. There are massive, massive magnitude moves all over the tape. So what does that say? Like there's going to be money flying all over in every direction. You're going to have to choose.
Markets are still dislocated. It's just that it was on a stock rally today. So Ian asking that very thing, your thoughts on oil. I know you got to check in. Listen, it was such a crazy day. And as I put in the chat, Tony was banging on the keyboard right till we popped on air. So he's going to have to take stock. But generally, when you look at, what's going on with oil, what are you going to be looking for is maybe instructive, Tony?
Yeah. Put it this way, I'm a big range break enthusiast in terms of like, I want to trade, a breakdown into a new range. And we obviously just saw that in crude oil, because like to a dime, we had a flat bottom range at around $61, $62 in crude oil. We broke down through that, traded to like 57, traded back up to it at 62, then traded the lows again at 55. And now we're right back towards that resistance level. So I'm still looking for this oil chart to fail, quite honestly. Right? I think that it's like no accident. Trump got OPEC to wind down their output cuts. It had to be something like that, right? They're winding down output cuts out of the blue while risk is under pressure and oil's at the bottom of the range. Guess what? OPEC wants to get oil lower. And it seems, I would guess that they might be doing it for President Trump to make this maybe a little bit less difficult, keeping rates down, right? If OPEC is allowing oil to go lower, I don't see why it can't go to 48.55 or 48.60 or something like that as the new range, especially if a lot of the tariffs are going to stick and there's going to be an economic slowdown associated with that, which I could totally buy into. I'm not an economist, but that makes general sense to me. And then we're going to have a real economic slowdown. It makes sense that airlines just crashed, and it makes sense that oil can go down from here. Sure, I can believe that trade. So I don't want to, I'm not dogmatic about anything. Anything you tell me that could happen, if it makes some kind of sense, I'd be like, absolutely, that might happen. So, there's a lot of different things to try to pick off here. And I think that's kind of one trade that's showing itself to me, which is why I think it just came out subconsciously. Airlines, just like Jets, the airline ETF, just went from 28 to 17. Oof. Yeah, like halved practically percentage-wise, while the price of jet fuel is crashing.
Yeah.
So I'm saying, maybe there's an opportunity here somewhere. I don't know if we found the bottom. I'm not going to pick the bottom in airlines, but I know we're not going to stop flying either.
Yeah. So. And you bring up a good point, which is, in all of this, if you don't do something, doesn't mean you don't have it on your pad or your radar ready to, like, what would you want to do if you get clarity? What are you interested in? What are you watching? Like, I know you're always thinking about that, Tony. So that's a really good exercise for people to do, like get yourself ready in your framework to think about where you might want to make a move. I want to put this comment up. I'm going to take it more as a comment as opposed to a question, because I think it's unanswerable for a lot of us, but I love the way you're thinking, Pepe boy. How is this not a bull trap? China knows that Trump's weak spot is bonds now. And we saw some stuff on X. I think someone put Bessent bond market 1, Bessent 0. I think that was someone's comment I saw. But there is a question as to, they were able to withstand the stock market pain, but the bond action, did that cause some concern? Bessent said today that he sort of brushed off that the timing was today, that they were planning this all along. Well, all right. Of course he's going to say that, but I think that's a great point. Is that something that's on your radar?
First of all, I never said that this isn't a bull trap.
Oh yeah, he didn't say you did. I think he's just talking out loud.
Yeah, but I'm saying, but that's why, that's kind of just, saying what I said in a different way to me. You know what I mean? I said, I'm not going to get caught up in getting long on this rally, 500 points off the lows. I'm not going to get caught up, getting short down there in the hole this morning, I believe anything can happen right now, but you got to take the trades you're given. And so now, like I said, we're lining up. I went home. I was long all day. I got flat into the close so that I can short it at higher prices. Quite honestly, I mean, we're into heavy resistance level right now. And the first time up here, God forbid we get a gap open in the morning that gets everybody bullish. That's a short idea for me for the day. And sometimes it might not come back from that price. We might go from there right back to the fucking lows where we started off today. Like, not out of the question, like I said. So, yeah, man, like we're going to be, we're in this, I can't get my S&P chart. Now we're going to be in this range, rather than 4,800, 5,200, we're going to be 5,200, 5,600, and we're going to see. So.
So there's so many great comments, everyone. I can barely keep up with them. But everyone's so happy to have you live today, Tony, on a day like this. Sweet. And I couldn't agree more. Let's put Doug's up. Does 5,200 look like a possible next higher low? Yes, exactly. Somewhere around there. I mean, I had the first bounce off of the lows made it as high as 5,300, quite honestly. So I was just looking at that. I'm like, give me one pullback to that old intraday high, because that's the price we failed yesterday, curled all the way back to the low. So that should be good support now. That's what I was saying. My first idea is 5,300. And then, even better. And I say better because 5,200, we had kind of a long consolidating day yesterday around that price. And so there'll naturally be a lot of stock that changed hands there. So that might be even better support than 5,300. But at 50 vol, offering somebody a 100-point range of support in the S&P is perfectly okay. Yeah. We're not going to nail it by 5 points this time around. You know what I mean? I can't find one. I'm going to squeeze one more question. I can't find the question, but it was on gold and levels that you're looking at in terms of gold. Apologies for whoever it is. I'll find it maybe while you're talking and put it up. But what are you thinking about that? I felt like so much of the action was in stocks today. So, but how are you fitting gold into this?
So gold became a line item on everyone's P&L when we were trashing stocks down to the lows, right? That's what knocked gold from 3,200 down to 3K, 29.50 if you want. That's where the 50-day moving average is rising up to meet price. That's where it held. It looks just like the stock market, quite a bit like the stock market, where we've got a double bottom into support. And then, we eclipsed yesterday's range on the high. We took out yesterday's high and just kept going and going and going. So gold is doing things. Gold is doing what gold bulls want it to do, which is staying in trend and returning to being a sort of safe haven. But what's amazing is I don't know that you can still call it a safe haven. Put it this way. I've been saying gold has been its own bull market for a while now. That's all. And I'm not claiming there's anything brilliant about that. I'm just saying that it hasn't been necessarily directly correlated to anything except its own bull market.
That's what people want.
Yeah, right? Yeah, exactly. That's what you want. Exactly. You don't want it getting wagged around by every dollar move. No, you want to see it do what we've seen. Be strong when the dollar's up, be strong when the dollar's down. That's its own bull market. So that's what I've thought about gold. Gold just proved to me that I better not take it lightly after it held this 50-day moving average while they shit-canned everything else, right? Every other chart that you can point to has gotten damaged except the gold chart. And literally every single one, like silver disappointed all the bulls. The gold index chart, GDX, might have a false breakout at the highs. That thing's not out of the woods yet, but that chart came off hard. And gold is the only thing that's taken this whole move in stride. So, like mental note to self, don't be shocked if this thing gets up and goes again.
Yeah. Yeah.
It's acting pretty well. That's all I can see.
It is. Tony, amazing stuff. I'm really conscious of the fact that you've got a ton of work to do and digesting to do to get set up for the other day, but a lot of appreciation for just reminding everybody that these are really tricky markets and that it's a day-to-day situation and that you cannot get married to a narrative. And JJ put up a question. If these markets aren't for amateurs, what do we do? What do I do, Maggie? I agree. Listen, one of the things is don't feel like you have to do something if you don't get paid to do it, right? That's been a lot of good advice from people. Like doing nothing sometimes is the smartest thing. But also this is when I think you want to lean into experts, right? Like you want to look for folks like Tony who are out there who have services. Like you don't have to go it alone either, I think is kind of the message, right? And this is where you got to lean into experience and wisdom. I shared something yesterday. A lot of people are being really great about having been through it before and sharing that experience. So, just protect yourself, just be careful, lean into people. And Tony, you're doing something now. I think I saw, right? You're doing one-on-one sessions. Is that part of what you're offering now?
Yeah, a new offering. It's kind of born out of a couple of clients that asked for it. And I just wanted to have some time alone with me, like one-on-one, so that they can pick my brain and I can be focused on what they want me to focus on rather than have it always be in a group setting.
Yeah.
So I created that, and knock on wood, it's gone very well so far. I'm thrilled with it. I want to add to that conversation though and say, like, one of the things that you want to think about at high vol is not only shrinking position size, obviously, but how dangerous it would be to add. Right now, think of it as it's okay to stomach a bigger loss at higher vol if you've got conviction, but it's never okay to add. And as soon as you add at high vol, your bankroll's shot. I don't care what anybody says. You know what I mean? It's just like you're in there playing $50 and $100 blackjack table and you're live for 5 hours. And all of a sudden you say, you know what? I'm going to bet the whole $5,000 in my pocket on black and roulette, and it's red and my day's over.
Right.
You know what I mean? Like, it's not the way we do things here in the trading room. So,
Yeah. And I think Dale yesterday, was talking about probing, protecting, using some of the tools that are out there. This is like an important time to be doing that, not just like kind of,
Yeah. And the other thing that's saved me, and only because I've been through these before, is, like I said, I do a lot of thumb twiddling until things get to my level. I was waiting for a short covering rally like yesterday, all day, and finally got it into the end of the day yesterday and said, okay, this is a spot to put some out, right? This is what I think. And we got all the way down to the lows, and I waited for that and said, all right, this is a spot to buy these, and now we've had these on, and now I'm flat, and now I'm going to spend plenty of time literally doing nothing. Because like I said, I got wounded last week and came back to life this week, which is amazing. But there's still going to be more moves to capitalize on. And I just don't want to get caught thinking that it's in a direction and have the market tell me something else. I'd rather just be open to listening what the market says the first time without a fresh idea in my head.
Yeah. Yeah. I mean, I think that's like discipline and framework too, right? Like,
Yeah.
you can't, because it's really hard to, we were watching this all today, and I think a lot of people are talking about it. Like you're like, like, you feel like you want to do something because it's,
Yeah. Well, it's one of those things. It's like, it's like how do you know when to bet big in blackjack? Right. And you have, like, as a blackjack player, you have an answer to that. Like other people that don't know how to play blackjack just decide finger in the wind. Okay, that's new beer. I got a new beer, a new shoe, bam, new big, huge bet. And a seasoned blackjack player be like, what the fuck you doing? You bet big when the dealer's losing. Right. And you got to sit there all day until the dealer up, deal a break. Up, deal a break. And now everybody that knows how to play blackjack is looking at each other saying, is this the moment? This is when we should be betting big, right? Because she's losing now. And next thing you know, that's when the whole table goes on to run. And it's the best thing that ever happened in your life, is being at a blackjack table with everybody winning. But there's some sense that you got to think about it that way in the markets too.
yeah. I just want to read this. We have such a great community. I just want to read this. Thank you, Ralph, for putting this in here. I think this is a great, sort of sums it up. He said, Ben Graham's mom lost her life savings in the panic of 1907. Value investors tend to buy the now, not the future. The future is uncertain. I can see both sides of the coin, I think. I think that's where a lot of us are. There's a lot of uncertainty in the future. And so, I think it's wise to remind people that sometimes it ends badly and you got to be a little cautious here. So thank you for that sage little quote, Ralph. We appreciate you.
Oh, yeah, that's Ralph.
Tony, fantastic. Congrats on the amazing day. I know a lot of you guys have been, this is where all your experience pays off. So really appreciate you taking the time to come on and share it with all of us today.
I really appreciate you having me. I love talking about this stuff and helping you out. And you have a great show. How awesome was it? I had Kevin, Brent Donnelly on our show this morning, and I had to compliment him. I was like, dude, you go on Maggie Lake last week, you say, at some point, I think the confidence stuff is going to matter. Next thing, the bond market collapses and they're maiming Scott Bessent as Baghdad Bob.
Yeah.
I mean, if he didn't nail that call to a cross,
yeah,
I got to give a guy like that kudos. So I'm just saying, like, I watch your show and I appreciate the work you do. So thank you for doing all that work.
Awesome stuff. Information is power in this kind of environment. So appreciate it, and appreciate all of you for tuning in. We're here and on Substack, of course, and we'll be back again tomorrow. So everybody take care and good luck out there.